Where it started, just waiting for this to start on YouTube here. Hmm. I might have to change my settings, but that's fine. We won't worry about it right now. Good morning. Hope there's more people coming in. Good morning. Hope you all had a great weekend. Happy Monday. Next week is Thanksgiving week, which is exciting. But it's also the starting next week is usually when people really start to slow down, and if they haven't found something, usually stop for Thanksgiving and Christmas and start back up in January. But that's definitely not us. We're going to continue to do what we can in order to get these deals in. Last week, I apologize. I had to cancel literally last minute. My internet went out again. The week before that, you guys remember that for some reason my internet went out in the middle of the meeting and I had to jump back in. Thankfully, everybody was still in here, but it went out again. I think it's just for some reason, and I'm hardwired too, which is weird. I'm not even on Wi-Fi. I think just the office internet has been having some issues lately, but hopefully they fixed it today. So far, so good. Well, we're going to kind of go over the news for 2 weeks. I mean, last week there wasn't really much, to be honest with you guys. Most of the news came in the previous week, which would have been perfect for us to have the meeting last week to kind of go over it. But either way, the Fed had their meeting at the beginning of November, which was Wednesday, because Tuesday or Wednesday, November 1st, and they left their rate unchanged, which was expected. We're in the range of the Fed funds rates in the range of 5.25 to 5.5. A couple of weeks ago, mortgage-backed securities climbed significantly. That was the week of the Fed meeting. And it was because a lot of the jobs reports came in below expectations. Finally, we've been waiting pretty much all year. And I say that, and it sounds hilarious, but it's also messed up, right? Because we don't want we don't want people to be unemployed and things like that. But I think in terms of the news of interest rates and things like that, it's kind of something that everybody's been waiting for kind of jobs to show cracks and things like that. And so finally, the Bureau of Labor Statistics reported that there were 150,000 jobs created in October, as opposed to the 180 that were expected. This is the lowest amount since June of this year, which was when rates were in the mid sixes. The revisions to the report for August and September also shaved off about 101,000 jobs in those months, and unemployment increased by 0.1%, so from 3.9% from 3.8%. ADP's employment report also showed that private payrolls were also weaker than expected, with only 113,000 jobs created. So, for those of you guys that don't know, the Bureau of Labor Statistics, they do a lot of modeling. They'll call households and they'll ask, "Are you employed?" And they do that of about, I think it's about 40 or 50, and then they'll kind of basically, go with that number and make it as a whole nationally. So sometimes it's a little bit inaccurate. ADP is only private payroll, so it doesn't have to do with government pay or anything like that, right? You notice that people that work for private companies, a lot of their paychecks are ADP. Continuing claims, which are people still on unemployment even after their initial claim, continues to rise, which means less people are finding work right now. This is something that the Fed has been waiting for as well, turning us into a recession, which could be a really bad one with how much debt people have right now. People are over leveraged heavily, and real estate is going to be one of the few ways out for them when they're behind on bills and they need to be able to catch up and can't qualify for a HELOC because their credit has taken a hit. They're going to have to make some tough decisions, right? The average loan to value right now is about 47%. So people have equity that they're going to want to tap into soon, which would mean selling and downsizing as well. And you guys, like, for me too, kind of getting into this next topic, I was thinking, what happens to the people that do the Hometown Heroes loans? Is there going to be enough equity in a couple years for them if they need to make a decision to be able to make one, right? That was one concern that I had when we first started doing these Hometown Heroes loans. And actually, Case-Shiller's home price index, which is considered the gold standard, that's the one that we really talk about. There's a bunch. But we usually always speak about the Case-Shiller home price index. Hold on, let me mute here. And that showed prices rose nationwide 0.9% from July to August, and they're up 2.6% year over year as of right now. And by year over year, because getting into this next topic, you might get confused. It means from November to November, or sorry, no, from August to August. We're in November now, but from August to August, when they're doing the reading, there's a difference of about 2.6% year over year. Miami and LA LA tied for the hottest markets month over month at 1.2%. So South Florida seems to continue to not have hit a top yet since the pandemic. So that's another topic as well, right? Is a lot of these markets, they did kind of top off at some point, then dip, then went back up. We haven't hit a ceiling at all in South Florida. And that's also good and could be a little bit scary as well for the future. But in a sense, right, if rates when rates dip down, we're going to continue to have that higher ceiling. So as of right now, people that are getting into a home don't have to worry about, or even within this past 10, 11 months, right, haven't had to worry about their home prices decreasing. I think that as we turn into 2024 here, home prices, I mean, interest rates are going to dip a little bit. I've always said anything with a five, people are going, the market's going to flood. And I saw a video of the lady, she does the Shark Tank. She's also a real estate investor and guru as well. It's the older white lady. She said the same thing. She said people, as soon as rates hit anything with a five, the market's going to flood. And I thought that was kind of fitting because that's pretty much what I've been stating. For some reason, that five, Barbara Cochran, yeah, that's her. For some reason, that five number is what people are waiting for. And as soon as that happens, you're going to see a lot of listings and a lot more buyers on the market than listings for sure. Between all the home price indexes, which include Case-Shiller, FHFA, CoreLogic, Black Knight, and Zillow, those are pretty much all the home price indexes. We don't go through all of them. Case-Shiller is the gold standard. FHFA only does conforming loans, so anything 725 and below, right? They don't track anything that's going to be higher than that because that is the GSEs, the government-sponsored enterprises. CoreLogic, Black Knight, and Zillow, they have their own home price index, but all of them are showing appreciation to be on pace at about 6 to 8% for 2023, from the start of January all the way to December, right? By the time the December ends, home price appreciation should be anywhere within that range. All of them are literally 6, 7, 6, 8, from what I saw. So they're all on par and have the same kind of predictions based off of what their current home price appreciation is from January till now, which is good because we thought that 3 to 5%. We actually, in the beginning of the year, at least from what I was reading, was probably closer to about that 3% is what everybody was expecting. So we're going to be pretty much double that. And that gives people that equity flow that they'll need within 1 year. Imagine people that bought last year, what that's going to look like for them as well. Hometown Heroes opened up last week with $36 million, and they're down to $29.5 million after the first week, which would put us at a pace of about 6 to 7 more weeks before the funds run out. I'm surprised that they only got rid of $7 million last week, but it could show true to how the market has slowed down in general for a lot of people. I think a lot of people right now, because home prices continue to increase and rates have been elevated, are not finding what they want, and so it's maybe taking them a little bit longer to go under contract, as well as very, very little listings. So it's not that people are not looking. At least I don't think, based off of the numbers that I receive in terms of applications and leads and stuff like that. There's people that are on the market, but I think from what I'm noticing is that a lot of these properties are really, we're trying to scrape to see how we can fit it within their DTIs, right? Because taxes just came out and everybody's taxes increased in November for the most part, especially if you weren't homesteaded. So that's affecting people. Of course, the elevated home prices, right? People want single family, stuff like that. And then if their credit is not great, forget condo financing in general, because even if their credit is great, conventional, we kind of went over that a couple of weeks ago, how difficult it is to get financing on a condo right now, and what those implications are going to be moving forward in the future with the current owners that own those properties, that own those units, right? With special assessments, if they're not going to be able to afford them, what happens to if conventional is not financing these condos? What does that do to their property values, right? And things like that. So besides that, it's still very difficult because if you're doing FHA, right, it's typically only lot and block. You can do FHA single unit approvals, but if you think of a conventional stuff right now, FHA is even tougher. And most of the time, it's just the client spending money for two or three associations before they actually find one that FHA will finance. Because that is a lot of money that they have to put up front for the condo questionnaire and things like that. FHA does not release an FHA case number, which is what's needed for the lenders, until they review the condo questionnaire from the association, which could be 2 weeks in. So just things like that make it very, very tough for clients to be able to not only find things and go under contract, but also be able to close on them because of a lot of the restrictions that we're seeing. For those of you that hopped into the discussion a couple Tuesdays ago with YRD, thank you guys for showing up. We definitely weren't able to get to the meat and potatoes of it because there was a lot of things that we wanted to discuss ahead of time. But that's just a little bit of what the Young Realtors Division and NAREB kind of brings on a national level. And before I kind of jump into NAREB and YRD, I kind of want to give you my piece on what I think because I've done quite a bit of research and actually talked to Nicolette about it in our podcast as well, right? I think that because we were talking about in that meeting on that Tuesday about educating our clients and showing them how to save and things like that. And guys, I think that should be something that we're doing already, right? In my opinion, there's a lot of financial advisors. In the past, financial advisors were people that wouldn't talk to you unless you had $50,000 ready to go to invest, right? There's now a lot of financial advisors that kind of cut down to the low to moderate income people, right, to help them save, because what they're doing is they're going to get a percentage based off of that money market fund that person is investing in, right? So they're working off of quality as opposed to quantity, right? And so those people, what they typically do is they'll give you a free roadmap on your finances, how to lower your DTIs, what you can do to save a little bit extra money and things like that, right? And so you can automatically have a direct deposit into a money market fund. Well, the client can, right? Let's say 10% of your income every 2 weeks or whatever the case is, or that's money that you don't touch. And if it's accruing 5, 6, 7% interest within a year, you're going to have more money in there than what you put in that you could use towards your down payment. So that's all great, but that's stuff that should already be happening now, in my opinion, right? Those are things that we should already be telling our clients. I'm partnered with a financial advisor and I'm doing the same thing, right? Is if the client doesn't qualify for DTI issues or they just don't have the down payment and stuff like that, and they need somebody to help them kind of guide them through that, you connect them with a financial advisor that's going to give them a free roadmap of what to look into. Everything's pretty much free. The way that they don't tell you this, but I am telling you, the way that the financial advisor is going to get paid is once they actually open up an account through with them through these money market funds or things like that, or doing the life insurance and stuff, then that's when they're going to get paid on the back end, right? But I think when it comes down to this NAR lawsuit and this discussion in the future where buyers are going to have to, or buyers agents may, I don't think that they're not going to exist, because I think that what's going to happen is sellers are still going to need to sell, and your job as a buyer's agent is to talk to the buyer, right? And to tell them what your worth is. And the way to do that is essentially telling them everything that we tell them right now. Why are you going to go with the listing agent when the listing agent's right fiduciary responsibility is to the seller? They're going to tell you things. You don't know who they're going to connect you with in terms of, because you still need to get an inspection and lender and things like that. So you don't know if that listing agent is going to get paid by that lender telling you, hey, we're going to accept your offer because, if you use this specific loan officer, then that loan officer is giving them a kickback, inflating the interest rate. So that's money there out of that client's pocket that they may not need to pay, right? That's just one small aspect of it. But look at it in terms of, I've had stories from inspectors that say that the seller was trying to cover up some stuff in order to make the deal work, right? One specifically, the whole house had PVC piping in the back, and you couldn't tell because all the piping that came out through the front that was connected to the toilet and things like that was the correct piping that was needed. The only way that they found out was that there was some sort of a hole or something like that in in the closet and also in the attic, you can see the PVC piping kind of going through. But if that inspector, right, is hired by the listing agent and has a rapport with the listing agent, it's South Florida. Let's be honest, right? You don't know if that specific inspector is going to have that responsibility directly to the listing agent or not. So it's having these conversations with the buyer, right? What if the seller says that you need to come in $10,000 over, right? That may not be the case. So if I help you through this, or when I help you through this, right, my job is much more than helping you find a property. You're going to find most of the clients, even right now, that you guys have access to the MLS and able to send them listings. They find their own properties through the online websites or anything, because they're going to tell you, I want a 3-2 in only these specific places, right? In Fort Lauderdale, in the prime areas. And so you're going to set up your search that way based off of what they told you. And then all of a sudden they see something on Zillow that's outside the area. And now they're saying, oh, you know what? I actually like this property. It happens all the time. So your job is not to show them or send them MLS listings so that they can pick a home that you like, because most of the time they end up finding their own. Your job is to protect them. And so if you come off and say, that's what I'm supposed to do, I can save you hundreds of thousands of dollars, right? And we'll still try to negotiate with the seller to get at least a portion of my commission covered, because I'm going to do this and this and this and this for you, right? Now you start to bring value. Now more people are going to be more receptive. And let's say your commission, just to keep it simple, right? It's a flat rate of $10,000, whatever that purchase price is, right? You tell the client that $10,000 could possibly save you, 20, 30, 40, 50, based off of the lender that you're using, based off of the inspector that you're using, based off of the offer that you're going to be putting in, because the listing agent's not here for you. They're here for the seller. And so they may try to, squeeze you for as much as you can. And that $10,000 that you may not even pay, let's be honest, because we're still going to negotiate it with the seller, is more so of a protection so that you know that I have your back. And then when you submit that offer, you tell the seller, hey, I have a client, I'm bringing them, they like your property. These are the contingencies and everything, right? But I want to get paid my commission, X amount. And you may end up meeting the middle, because right now what's happening with sellers is they're still agreeing to the 6-7% the listing agents are giving them, and they're still giving closing cost credit on top of that, right? It's not like they are bleeding for money or that they're really in a bad position, because from what I'm seeing on offers or from transactions is they're still paying both agents whether they want to or not. But on top of that, if they were really skinny, they wouldn't be giving closing credits too, and they're doing both. So you guys will be able to negotiate with the sellers. I don't want you to think that your job is going to be completely obsolete, but your job is education. All right, your job is managing the transaction. I've always said that. Anybody can find the property that they want. Now, when they go under contract, right, what are the steps that they need to be taken, and who's going to protect me within those steps, right? Getting false pre-approvals as well could be a big one too for them. So just different things like that. Learn how to talk to your clients in different ways. But most importantly, your job is to protect them and to educate them on the horrors of purchasing a home, because it's not easy. And there's a reason why there's a selling agent and a buying agent, right? Whether the commission should be split or not is irrelevant. There's a reason why there's two separate ones, right? Because one protects the buyer and one protects the seller. So as soon as you tell your buyers that should be able to help you kind of get through that norm. There was a question that was asked to me as well about being able to finance the commission into the loan, because I know that that's a question a lot of you guys have. No. Okay. Plain and simple. That's kind of the same thing when the 40-year loan modification came out. Everybody thought that lenders could now do 40-year loans. Guys, these are laws and guidelines that are put in place by the CFPB, right? In order to make these things what we call qualified mortgages, which is a standard conventional FHA, things like that. If we're financing a realtor's commission into the loan, what that does is that increases the APR. Okay, your interest rate and your APR are different things. When you go car shopping, they only give you your APR. When you're going mortgage rate shopping, they're going to give you your interest rate. Your APR is basically all the money that you are investing into the transaction all in together, because you may be putting 3.5% down, right? And the lender's going to lend you $400,000 at a 7.5% interest rate. But technically speaking, you're still paying the lender an extra let's call it $1,500, $2,000 in closing costs, right? For processing fees, stuff like that. So why wouldn't they not just reduce the loan amount by that much, right? It's not, the loan amount's not reduced, that's closing costs. But because that's money that you're still paying back to the lender, that's considered into your all in, your annual percentage rate, right? So really, if you were to have that loan for 30 years, your APR, because after you pay off the lender fees and everything, would be that higher rate, right? And so if we add in that realtor commission, that's going to be considered into the APR, and that's going to push people over. Not only that, lenders have a cap of 3% that they can charge clients. And let's say your commission is 1.5 on that deal specifically, just to keep it low. That means that you're giving the lender only 1.5% of wiggle room to be able to charge the client. You think that lenders are going to agree to that? Absolutely not. The only way is to change laws, unfortunately, through the CFPB, and change what a qualified mortgage is before we even have to start having that conversation as well. Really, really quick, on Wednesday, I'm going to be sending everybody here an email. I know that most of you guys are not members for NAREB. I want you to be. I think it's very important for us to talk one-on-one what really NAREB is. This is, these meetings are to educate you guys on the market, but I also think it's very important for you guys to get into your actual local cities, start taking care of your people that you deal with on another level, and that is through organizations such as NAREB, which is very similar to NAR, right? National Association of Realtors, National Association of Real Estate Brokers. NAREB was founded in 1947 because NAR did not allow Black people or minorities in general to become realtors, right? And so the fight since 1947 has been for democracy in housing for real estate agents and for clients as well, right? The clients that we service every single day, the people that look like us, right? And so I think it's very important for you guys to kind of see what NAREB is about. On Wednesday, we have a general membership meeting. It is for members. I might get killed after this call by some of the board members that are on this meeting, but either way, I definitely want you guys to at least show up. Usually these meetings are only for members, but if you're interested, show up, let's have a conversation. We will be installing a new board. I will be one of the vice presidents, the second VP specifically. But for those of you that joined that Tuesday meeting a couple of weeks ago for YRD, that is the Young Realtors Division. Okay, so they can come, just not allowed to vote, which is fine. All right, perfect. So you guys, you heard it from Sonia Hickman. You guys can show up on Wednesday. I'm going to send you guys the flyer. It's after hours. It's at Lighting Depot in Pembroke Pines here by Pembroke Gardens. So maybe we go out for some drinks after or something like that. But we're going to be doing that installation for NAREB. And then part of NAREB, the trade, is the Young Realtors Division, very similar to the Young Professional Network for NAR, Miami YPN. Some of you guys have heard it. That is the NAREB version, right? The YRD Young Realtors Division. So, and I will be the incoming or the first president of YRD Miami. And I want to talk to you guys about joining that as well, because I think it's very important for us young leaders to show up for our communities. We have a lot of fun things that are planned for this year. We're going to be doing different membership mixers and events. We're going to be doing a huge inaugural party in January, which I'm working on. We're planning on doing things like a basketball tournament for charity, right? And charging people basically, $5, $10 or whatever you show up, and all that money, all the profit's going to go towards a specific charity that we choose. So different things like that, getting creative, doing all our membership mixers in Black-owned businesses. I think is going to be very important to show you guys what BOBs are out there in South Florida, but also support them. So I'm off my high horse. I don't know if you guys have any questions in regards to the market stuff that we went over today or anything like that, or any scenarios that you guys had within the past week. Hey, Dr. Carla, that's a good question. We're in the middle of switching out some pieces, because I'm usually the one that's responsible for it with a VA, me and Tiffany Washington. But I'll make sure that you're going to get notification. We're actually sending out multiple emails today for the event on Wednesday. I've been a little bit slow stepping because I was a little bit busy this past month or so, but we're going to get it over to you. No worries. But even if you're not, I'm gonna send you the flyer through my email so that way you guys, if you guys have time, you can show up and we can have some fun. Any questions, any scenarios you guys want to run by me? No? Okay. Well, thank you all. Hope you guys have a great week. We will most likely not have Monday Mortgage Minute next week because it's Thanksgiving week. I may be taking a little bit of a break since it's only typically a 3-day work week. I'll still be answering emails and phone calls and stuff like that, but gonna try to take some time to unwind, get ready for December in 2024. We will be doing in here a business planning meeting probably the week after Thanksgiving. So we'll sit down and we'll talk about, I'll have like a little worksheet that I'll send over to everybody so we can talk about our businesses for 2024, what our goals are and things like that. So thank you all for coming and see you guys soon. Question about the development program with YRD. Gina, unmute.
Good morning.
Hey, good morning. Nicole, I'll give you a call in regards to your question.
Yeah, so I know you're with the NRB, I think it is. I just want to know about that development program that they're launching.
The NID.
Yes.
No, I'm not with that. That would be Mr. Denny Felton with the mortgage experts. I can connect you with him because I'm not too sure of NID.
I'm sorry, the NAREB.
Oh, NAREB. You're talking about the HAP program. The what we have is a homeownership assistance program.
No, I think she's referring to, excuse me, Mike, I think the development program that we've been talking about. We have a development academy. All of the
Yes.
details have not been laid out just yet, but stay tuned. Madam, Dr. Courtney is working on the final details of that. So that should be out sometime. Just look for it in early 2024.
Okay, and which organization is doing that? The NAREB, right?
Yeah,
National
NAREB.
Association of Real Estate Brokers, NAREB, NAREB. Yes.
Okay, awesome. Thank you so much. I appreciate it.
You're
No
welcome.
problem. Thank you. All right. Thank you guys. Have a good one.